Welcome back, guys. In the previous video we talked about a few things and then we wrapped it up by saying there are three things you do in Forex. You're either buying, or you're selling, or you're waiting. So right now we're going to continue and then I'm going to expand on these three things. Now what I want you to understand before we go to the details of the three things I mentioned is that Forex is trading history. Forex is trading history. Now, I don't mean, checking for the year that there was World War II, checking for unnecessary details. No. What I mean by Forex is trading history is that the market is a set of calculated repetitions. In summary, the market is a set of repetitions. The market literally repeats itself over and over again and again. So what you do in Forex is that you trade history and you trade patterns. So it's either like it's the same thing basically. You trade history, you trade patterns. The market has done certain things before and there is every tendency that it will repeat itself again. So the concept of analysis is going to the past, studying what the market has done, probably a particular currency pair. Let's say you take Euro USD. It's a concept that is called back testing. It's a concept that is called back testing. This is when you take a particular currency and then you study it into the distant past to check for repetitions, because the market is a set of patterns. It repeats what it has done before. So that's why I summarily said in Forex we trade history, because the market keeps repeating itself from time to time. Now there's a very popular concept. Many of you who have been around people who trade, you must have heard this before. Support and resistance. Now the concept of support and resistance is very basic and is very interesting at the same time. It talks of the market getting to a point where it hits a peak. I would show us here, then I'm going to go to the chart and show you clearly. This is the top of your chart. This is the bottom of your chart. All of these candlestick, I'll use lines to represent it. Then it comes here, dances around here, come down, go, dance around here, come to the bottom, go up. Now this place where price has come to several times and then it bounces back from that particular point or that range, you just notice that there's a place or a very close range that once price gets to that point, it runs back down. That is a resistance. The opposite is a support. When price comes down, goes up, comes down to a particular point, you notice at a particular range, price keeps going back up. That is a support. So the concept of support and resistance is quite basic. It is a resistance is a point that price gets to, and then like if a market is bullish, a market is buying, and then it gets to a particular point and it begins to sell from that point, and then it has done it severally. It gets to a point, it sells from there, it dances, goes back to that same point or around that same region and sells from there. That is a resistance zone. The meaning of resistance is it's a boundary line for the market. The moment the market gets to that point, it begins to go to the opposite direction. And it's the same thing with support. Once the market gets to this point, it begins to go back up. That's why this is called a support. As the name support implies, it is holding something from under. As the name resistance replies, it is hindering something from going higher. Like principalities and powers, that kind of thing. Forces that do not allow a person to penetrate the atmosphere, that kind of thing, Aha. Okay, so let me show you on my chart. Yes, let me show you on my chart. So this is a typical chart. Let me put it on 1 day. I'm going to explain that in a bit. This is a typical chart. I want to try and reverse it so that we can see clearly. Yes, let me use a particular line around this point. I don't know, my line is not straight, so just forgive me for not having straight line. But just take it the way it is. Just take it like that. Do you understand? So the market came to this point and then went back down, danced, came all the way here, and this place 1, 2 was a support, but the market broke it at this point and went down, so it became a resistance. I will explain that too shortly. This place is a resistance. You see that the market danced a lot, came here, this place was a resistance, then the market broke it, danced, this place was a support, danced, came up, this place was a resistance, danced, came down, this place is a support. So I wanted to just show you on the chart what resistance and support are like. Okay. Before I leave here, let me show you one more chart. GBP USD, Great British Pound, United States Dollar. Let me show you one more chart. Let me use a smaller time frame so that it will be easy to talk about. GU. Sorry, the internet is quite slow here and everything is hanging. You guys should just manage this, please. I hope everybody will understand this. Why is my pen not working? Okay, yes. So I told you forgive me today for poor lines. This. So I didn't draw the line where this was supposed to be a resistance, but I'm a support. But this is a resistance. The market got to this point and went back down. It broke this. This is a resistance. This is another resistance. There was a little support here. Then the market broke down, broke up. This is a resistance. This is a support. This is a resistance. This is a support. Market broke. This is a resistance. This is a support. This is a resistance. The market broke it. This is a support. Market broke. Then this is a resistance. And like that and like that. I just hope that with all of this analogy, we're able to get it. I just hope I've not confused anybody. I hope I've not confused anybody actually. Let me explain a bit on my notepad and then we will be done with this episode. Let me explain a bit on my notepad and then we'll be done with this episode. So what I was narrating is this. This is the top of the page. This is the bottom of the page. The candlesticks are going, coming down, going, coming down, going, coming down, going, like that. This is a resistance. This is a support. So at any time, let me see whether I can get another color. At any time the market is going up, it gets to a particular point, it drops. It gets to a particular point, it rises, gets to a particular point, it drops, gets to a particular point, it rises, like that. Where it reaches and drops is the resistance. Where it gets to and rises back up is the support. This is a very consistent pattern in the Forex market. What you have to realize is that the market does not move carelessly. It moves from point A to point B. Most of the times when you analyze, especially on daily or 4 hours, which I'm going to explain in the next video, you realize that the market gets to particular zones before turning back. There is just one area that is at that top there, that when the market comes around that place, it will reverse. And there's another place that is around that bottom there, that when the market comes around that place, it will go back up. So those zones are zones to watch out for. Support, resistance, and support. Because once you mark those zones that are resistance, if the market is buying, you will wait for the trade to get to that point, and then you will take a sell trade, because you have watched and observed that particular position, and you notice that anytime the market gets to this point, it reverses. So automatically you already know that when the market gets to this point, I am taking a trade. Do you understand? So, or the market is going down and you have observed that there's one particular point there, that when the market gets to that point, it begins to go back up. So what you are doing is that you're going to be looking for buy opportunities from that particular point you have identified. Do we understand? See you in the next episode.